All right, traders, it's February 28th, 2010. It's time to tackle some trading. What we have here is a chart of the E-Mini S&P futures, and we are going to take a look at the chart and see what we can extrapolate from the study of this chart. We have a daily time frame, and it is currently Sunday evening. We're actually seeing the futures market open up, and let me show you what we see here. We've just come off of a really strong move up, and we called the drop back. We said we'd get a drop back. We didn't know how long it would last, and it only lasted a couple of days. And now we're seeing some upward movement in price, and we're seeing the volume start to creep up here. And that, to me, alludes to some strength in this upward move. Now, what I'm going to do is I'm going to drop into an intraday chart of this. Here we can see Sunday, and we can see where the market started trading. So what we see here is Friday's close. You can see there's Friday, so here's Sunday. And we see the market has continued to trade up. It's dropped back a little bit, and now we're seeing some upward movement in price. Now, it's late in the evening here, and I'm not sure where that's going to be come open. I'll wake up early and make sure I look at it before the market opens. But we have some strong overhead resistance, which is that swing high from the daily time frame. And the market is establishing a really pretty nice little upward trend here. And some of the intraday trends have been violated. Here was an intraday downtrend, kind of a flag type pattern that broke. And so I see some strength. So that leads me to believe that we might be relatively bullish going into tomorrow. We'll see how that goes. And in looking at this small body candle here from Friday and kind of knowing that we're trading up into that resistance zone, I'm probably going to look for some breakout trades. And you know, assuming we get confirmation, there's going to be some good trading opportunities out there for you. So here's a quick trading idea I came up with, and we'll go ahead and drop into that a chart of JAS. Now this is Joann Stores, and we have a really nice looking overhead resistance zone right here, and kind of a nice little ascending triangle, almost cup and handle style pattern. Looking at that kind of pressure, upward pressure into here, into the resistance zone. And if that resistance zone breaks, any counter trend traders, any short sellers are going to be forced to cover. And we'll likely see some bullish trading activity kind of pile on. Now, how far would you target out above that? I'll take a real quick Fibonacci projection. What I'm going to do is I'm going to come up off the bottom of that cup or the back side of the triangle, and we're going to forecast out above it. And these would become your likely targets. So for about a one-day breakout, and this stock has about a 93-cent average true range. Let me pop open the average true range here real quick for you. It moves about 93 cents a day, which on a $37 stock, excuse me, is pretty decent. It's not over the top, but it's pretty decent. It's a nice looking pattern, and it's within about one average true range of that resistance zone. Now, if that resistance zone fails, you would expect the stock to ATR up, or run up approximately about one daily range. Beyond that, the swing ranges, you would be looking at 40 becoming a pretty solid target, and then up above that, about 41.38 becomes a typical breakout. So good percent return if you see that breakout for a couple of days and hit those targets of 39.38, about $40, and about 41.38-ish. So that's one particular trade idea. And I have another trade idea that came up from the seekers. CAS has a bullish retracement. So what we see is a strong run up and a drop back with this doji-like candle, kind of a signal candle. And this has done an interesting retracement. We've got about a 38.2% Fibonacci retracement. And, you know, depending on how you draw that, it's going to be 38.2 to 50%. But it's a typical drop back with a slowdown in the candle. So we see that the size of the candle here, we see a big drop, and then the next candle a little drop. And that shows me that that retracement is slowing down, and what we would look for is a confirmation up. So how would you plan these two trades? Well, for this bullish retracement, we would go real simple. We'd go with a buy stop limit above the candlestick high. We'd put a sell stop market below the candlestick low in case it triggered and then reversed on us. Let me go ahead and get that straight. And you would position size according to your risk. Now, as far as targeting goes, there's a couple of different targeting techniques for the bullish retracement type patterns. The first thing you do is you obviously can shoot for the known resistance. You have that known ceiling out there at about 1250. And you're looking at triggering just over 11 and change. The high for that candle is 1164. So you're looking at just under $1 in that particular return. But as far as percent yield goes, that's not too shabby. This has about a 54-cent average true range. Let me grab that ATR and drop it up here again. 54 cents on $11 is pretty handsome. Now, if you do get a confirmation up, you would expect it to run up about one average true range the first day is about the most you'd expect. It doesn't mean it can't go more, won't go less, but that's a ballpark target for you. So the day traders would be looking for no more than a 54-cent jump. The swing traders are going to be looking for resistance, and now what I'm going to do is I'm going to show you a Fibonacci forecasting technique using a projection tool, and I'm going to measure the size of that wave, and then we're going to drop it back to where we think support's going to form. And then we would come up with these multiple target zones. And we'd have target 1 at about 1233, pretty close to resistance, so I'd probably just call it resistance. Then we'd have target 2 at about 13, and then target 3 clear out here at 14. So we'd have some pretty obvious targets. And you'll notice that this one coincides with the old ceiling out there. So, no more than 14. That'd be a pretty impressive run for that security. We can see that it can do that. It's done it before, and we could go back and measure previous swing ranges and kind of go, okay, look, hey, this stock, it does have that capability to run that many points in that many days. We've seen it before. We've seen it here. And so if we got one more of those, you're not going to exceed 14, so you wouldn't want to get greedy on that. Again, for the targeting, you use sell limits, so you put the sell limit out there. I do want to go back and look at one of the securities we looked at last week. HOS was a short selling idea. We came into the chart with that small body candle out here. We said the gap had filled and we were expecting some confirmation down. We had talked about putting in a sell stop below the candlestick low. You can watch the previous video for confirmation on this. And we said, hey, if it goes the wrong way, we're going to put in a buy stop market to protect us. And we had talked about targeting the known support zone. Well, here's how the trade panned out. The very next day, it dropped as anticipated, and a good disciplined trader is going to lower their stop loss behind the candlestick to mitigate their risk. Now, that trigger's been filled, so we now have a position that's been filled, and we're hoping that it would get down to that target zone for our buy limit, and we're going to trail our buy stop with a one cancels other order. Now, the next day, we had a little doji come in, and that makes you go, oh no, I think it's going to turn up. So you have to trail that stop. Now that would put you down to your stop loss about the price you got filled at, where you were triggered below the candlestick low. So now you're into the trade 2 days, and you're at least about break even. Pretty close, maybe not quite, but pretty close. And then the next day it hit up. So it would have stopped you out at a relatively nominal loss or potentially break even trade, depending on how you got filled and where you put the stops, etc., etc. But that's why we trail the stops. Now, again, here it's showing some downward movement again as of Friday, but that particular trade became what we consider a scratch trade. So we'll see how the trades this week work out. Again, trading ideas on JAS, Joanne Stores, with the breakout, which let's just kind of talk a little bit about the preceding trend. This has had a phenomenal uptrend, and we're just simply expecting a continuation of trend. And we're looking for breakouts very similar to what we've seen in the past here and here. And of course that one's kind of a tough one because of the gap, but good breakout here. So we're looking for one more good break on that, and then I probably wouldn't get too greedy on that. I wouldn't expect it to go any further out then. Let's go with a real simple targeting technique, trend. Now, a real simple technique is to draw a parallel trend line. Get those as close to each other as they can as far as angle goes. Then you take the trend line and you go stick it out on the top of the range. And that would put your high end on the breakout probably no higher than about 42. So in the near term, and then you would expect it to maybe continue channeling up. And then back on the CAS, the pullback, again, it's a typical little bull pullback, not a real super strong trend. It's got a nice little, trend ballpark in here that it's come up off of. It's not the strongest trend we've seen. We do have some overhead resistance. What we like it for is just the strong technical pattern and a high percent ATR. I'd probably consider this more of a day trade than a swing trade, but sometimes it's okay to enter a day trade and let it mature into a swing trade. We'll see how that pans out, and we'll track these trades throughout the course this week. Otherwise, I appreciate you hanging out with me, and we will see you next time. Thanks.